with the Public Authorities Accountability Act, we need to have an audit committee meeting annually to discuss with our independent auditor, who is PKF O'Connor Davies, to discuss the financial statements for fiscal year, in this case for fiscal year 2023. And the purpose of today's meeting is to, after review of the financial statements and the management letter and the report on internal controls, is to approve the results, certify the results, and that's the final step for me, so I can submit my annual report to the New York State Office of the State Controller. So we are joined with Connor Riley from PKF O'Connor Davies.
Hi, how are you guys? Good morning.
Hi,
Brian should be joining too in a second.
And Brian Peterson should be joining as well. Connor, right now I've got a quorum of the audit committee, 2 out of 3, with Town of Islip Assessor Ann Danziger, Town of Islip Councilman Mike McElway, and we're still waiting for John Lorenzo.
I'm here. How are you?
John, you're here?
I'm here, yep.
Okay, gotcha. Excellent. Okay. So that's great. We've got all 3 committee members. Actually, Ann, as the, I think, senior member of the committee, could you call the meeting to order?
Absolutely. Move to convene the meeting of the audit committee.
I'll second that. Or all in favor?
All in favor.
Yes.
Thank you. Okay, so John, how long have you been on? I didn't know you were on there.
It's down.
I'm sorry.
Well, once again, I'm going to just kick this thing off real quick and then hand it over to our independent auditors, PKF O'Connor Davies. This is a audit committee meeting for the Town of Islip Industrial Development Agency and the Town of Islip Economic Development Corporation. We have to have this meeting with the audit committee annually in accordance with the Public Authorities Accountability Act. The purpose of today's meeting is to review the findings of our annual audit, discuss the financial statements, management letter, report on internal controls, and hopefully approve the results and certify the results so I can then submit my annual report to the state and the state office of the state controller. So without further ado, I will hand it over to our independent auditors at PKF O'Connor Davies. We have Connor Riley and Brian Peterson. Take it away.
Good morning, everybody. So my name is Brian Peterson. I'm the audit partner for these 2 engagements. I know some of you are really pressed for time. I'm going to go through this as quickly as possible, but please be assured that if there are any questions that come up after this meeting, you can reach out to me directly. My contact information, is readily available. So the first thing on the agenda is the ISLIP IDA. So we have our communication to those charged in governance. The only thing I want to kind of stress to you guys on this particular report is related to accounting estimates, starting off with that accounting estimates that are made by management are an integral part of the financial statements, and based on management's knowledge and experience. We do evaluate those key factors and assumptions used in developing those estimates in determining that they are reasonable in relation to the financial statements during our audit. The financial statement disclosures are clear and consistent where they were in the prior years. As far as going concern for the IDA, we concur with management's assessment of going concern that management has concluded that a going concern uncertainty does not exist for the year ended May 31st, 30th of 2024, and that's evidenced with the performance of the IDA this particular year. We had no significant difficulties in dealing with management during the audit, and that the corrected misstatements that management did do this particular year that we had found were not individually or in the aggregate material to the financial statements as a whole. If they were material, we would have had to discuss those particular transactions with you and what the management's failures were and not recording those at the end of the year. So we're happy to report that, what we did find was very, very small. Okay. Again, we had no disagreements with management during the year. And, we did provide management with a representation letter that was dated May 30th of 2024 for them to rep to us certain information related to the financial statements, and that they had provided us everything that we had asked for. Okay. There were no other matters that was in essence discussed with management. We're not aware of them, going to different consultants or different accountants and asking for differences of opinions and how we've advised them. We do advise management throughout the particular year as things come up with new GASBs and things like that, when that does not violate our independence. We are obviously independent, and we work for you as the board members. There's two sets of financial statements. We have the schedule of cash and investments, which is just a snapshot of the actual cash that is on the IDA's financial statements. We have to have this particular report because it's required by public authorities law. So, but everything, all of that is in the main financial statements. So on the main financial statements, I'm just going to go over a couple of highlights there. The first being the independent auditor's report. Okay, our opinion on that is that the financial statements referred to above obviously present fairly in all materials respects. So in other words, what that means is that we issued a clean opinion. It's the highest opinion that we can give for the financial statements. Moving on to page 5, kind of gives you a little summary of the details. As you can see, as far as comparison with 2022, we had a significant increase in assets, and that in essence is related to the increase in the cash that we had held for other governments related to the pilot payments that we just had at the end of the year. But obviously that was distributed, in January. So we have, but overall, our financial position, our net position here. Okay, you can see we went from these two numbers are the key numbers to 6.5 million to 7.3 million. So we had a nice increase there in our unrestricted. So overall, like you said, the assets were over 14 million, exceeded the liabilities of 7.3 by 7.3 for our total net position. The assets, again, were related to cash that we had because of amounts due to other governments. So that was only a timing difference, but our total net position increase was $831,000, which was a great increase. So you'll see that on the next page. So we had $1 million of charges for services compared to $738,000 in 2022. Our operating costs went from $529,000 to $545,000 for the year. And then, so that we had a decrease there, and we also had an increase in net non-operating revenue, which is primarily our interest income, because as we all know, interest rates went up, so we were able to capitalize on that and earn more interest. So overall, in 2022, we had an increase in net position of $246,000. In 2023, we had an increase of $831,000, which is 12.7% increase, a very nice increase. So again, like you see, we had an increase in our revenues, and that was in essence as a result of higher project closing fees as compared to the prior year. We just had larger projects that we closed during the year, and so that that is a big adjustment right there. So that was very nice to see that flow to the bottom line and increase the net position of the IDA. All right, moving on, we got to page like 8 and 9, which just kind of breaks down the detail just so you guys can see it a little bit further. You know, we have the 14.9 million in cash. We have the 7.6 million in amounts due to other governments. It's just temporary holdings. You'll see that in the cash flow schedule as well. We had our assets of $3,400 here, right, and our unrestricted of 7.337. Here's our detail of our administrative costs as well. So we got our revenues, like I said, our operating expense, our income from operations of over $552,000, our nice interest income of over $278,000, and giving that nice bump from 6.5 million to 7.3 million in net position. Okay. The cash flow is also, you know, a great indicator as far as where all this cash is coming from. So you see, like we had over a $7 million increase in cash. What is that from? So we had a $452,000 increase in cash from operations. We had a $6.8 million increase in cash, you know, from non-capital, which is the pilots. Okay, so next year, what's going to happen is you're going to see this flip. You're going to see that our cash decreased by 6 million, and you're going to be like, oh my God, my cash decreased by 6 million. But in reality, it's just because we had this nice little bump just with timing differences between when we received the pilot money and when we dispersed it. So that really doesn't play into the actual operating cash that you see above. I got $278,000 in interest income here, okay, with an overall increase. Come on, stop that. Overall increase in cash of 7.599 million. Okay, but you know, just for operation purposes, you got the 452 and the 278, and that flows into that. Moving on to page 17. So on page 17, there's just a couple items I want to bring to your attention. So this here's the IDA. As of December 31st, there was one series of revenue bonds outstanding for 15 million. Okay, and 149 leases outstanding at $1 or less, you know, for the end of the year, which, you know, you'll see on the schedules in the back. And as far as related party transactions, so we had the total value of 239,000 was reported as administrative expenses on the financial statements. The agency reimbursed the town that $239,000 for the end of the year. As far as supplemental schedules go, you know, that are required to be in the back, you'll see the schedule for the bonds, which is just the one. And then here are all the lease schedules that kind of shows what the related tax exemptions were that were provided to them for each for this year and for each project. Those go on for a couple of pages, but on the back of this are other reports, which is a report on internal control over financial reporting and compliance. So a couple of things to note on here is this is required because you're required to get a yellow book audit, a governmental audit. So over here, we talk about deficiencies in internal control, but we're happy to report that we have not identified any deficiencies in internal control for the IDA that we would be considered like a material weakness, but we are limited in our testing. So we just like to share that. However, material weaknesses or significant deficiencies may exist that were not identified during our testing. But I got to tell you, we go through pretty much 100% of the transactions here at the IDA, and like nothing came to our attention. The other report is a report on compliance and other matters. So this would be a report in case there was any laws or anything like that that were broken, not necessarily for the financial statements, but other types of requirements. And again, you know, our results of our tests disclosed no instance of non-compliance or other matters that would be required to be reported underneath governmental auditing standards. So, I mean, for the IDA, like I said, it was a very, very good year. So, John, I'd like to, at this point, well, let me open it up to any questions. Are there any questions related to the IDA?
No.
Okay.
I just want to wait. I always feel like I need to just clarify a couple of things that may be confusing to some of the committee members with respect to some of the numbers you went through real quickly. Again, there were some large numbers like 14 million that you saw, and Brian mentioned that it's kind of a timing thing. So we have projects that we collect payment in lieu of tax money from. and then that money all gets distributed. So it just kind of gets passed through.
Correct.
So if it shows up on the financial statement, again, it's a timing thing. And what Brian was trying, I think, pointing out that the net position of the agency is the basically our fund balance that went from about 6.5 million last year to over 7 million now, and that's from the revenue produced from the closing of deals that we did at the agency. So that's how the agency is able to make money. So we have a fund balance, and we can use that balance from time to time for certain economic development purposes. And that's all I just wanted to point out. Interest income, again, Brian pointed that out, it went up because of the interest rates have gone up. That's a good, that's one good thing about higher interest rates. And then the other thing is all those leases that he mentioned that are just really nominal. We don't lease property to anybody. We have when we have a project and the agency has an interest able to pass along tax benefits, we take a leasehold interest in the property and lease it back to the operating company. That's the mechanism that the agency wraps its tax exempt status around a private project, and we're able to do that. Those are the only things that I thought might need some clarification to you all.
Thank you, John.
So then, John, I would just ask if the committee chair could do a motion to accept the audited financial statements for the ISOP IDA.
I would like to make a motion to accept the audit of the Suffolk County IDA
Town of Islip
prepared
IDA.
by O'Connor Davis.
Town of Islip IDA.
What did I say?
You said
Suffolk
Suffolk County.
My God. My apologies.
That's
I
fine.
know where I am. I'm in the town of Islip. The town of Islip IDA, please. I would like to make a motion to vote to certify the audit.
I'll second that motion.
All in favor?
Aye.
Aye.
Great.
All right, so then I'll move on to the EDC. All right, so for the EDC, obviously we have a little difference of financial activity for this particular year. But again, we're going to start off with the auditor's communication with those charged in governance. So, we obviously finished our audit, we completed our audit, and we had issued a clean opinion on those financial statements. So again, related to responsibilities and significant accounting estimates, which there really wasn't any, and going concern. So going concern with management, we concur with management's assessment of going concern, and then management has concluded that going concern uncertainty does not exist from 1 year from May 30th of 2024. We encountered no difficulties with management or anything or anybody during the audit. As far as corrected and uncorrected misstatements, there were no such financial statement misstatements that remained uncorrected during the year, and our audit did not identify any misstatements that needed to be corrected by management. Again, we had no disagreements with management. There was a representation letter that was sent separately to management to verify certain information that was provided to us. We're not aware of management's consultations with any other accountants. And as far as other matters that we discussed throughout the year with management or of the corporation, we generally do that throughout the year as items come up. Okay, and of course we are independent with the Economic Development Corp. The Town of Islip Economic Development Corp also has a schedule of cash and investments, and again, it's kind of like it's a snapshot of the major report that we're going to go over right now. It details the cash balances, the cash notes, as well as the communication letters that are pretty much verbatim from the independent auditor's report that we have. So when we get to the independent auditors report, like I said, in our opinion, we say that the financial statements present fairly in all material respects the financial position of the business type activities of the corporation, which in other words, again, is a clean opinion. Okay, so again, we go into the responsibilities of management. Moving forward, we're going to go into the MD&A. Talks about these summary of the corporation's condensed statement of net position. So here we have our assets unrestricted of the the $2,200. We had $6,400 last year. We have cash assets restricted of 1,000. We'll get into that in just the next couple of pages. And let's see. We have our current and other liabilities of 100,000 as well, and our unrestricted of 2,299. So obviously, total assets were the 100,002, which was comprised of cash and cash equivalents and restricted cash. The total liabilities again was the 100,000, which comprised of the unearned revenue received from New York State Division of Tourism and Outdoor Recreation Grant in 2023. So this is an up to a $400,000 grant, right, John? That's been received.
Correct. It was so we on behalf of the airport, we applied for a grant what was it? The New York State Division of Tourism. And we successfully got that grant for them. So we're collecting that in $100,000
increments. Yeah.
Increments. Yeah. So I think what's showing up is the second installment that we.
No, this is the first. The second one you got, I think, in the early in 24. Yeah.
Oh yeah, yeah. Okay.
So we just didn't spend any of that money yet. So as of December 31st. So that's why we didn't recognize any of that as income this particular year, because we didn't spend it yet as of December 31st. Since then, there's been expenses, right, John?
I believe they spent 100,000 and then got the second installment.
Right. So as we spend 100,000, right, they'll give us 100,000. As far as the income results, you can see operating revenues was only 500,000 last year. $500 last year we had nothing. So operating expenses is $5,000 roughly a year. And here we had some interest income of $390. So but again, we had a negative change in that position here of 4,000. And which brought our net position from $6,400 to $2,300. So that is unfortunately, a not a good sign, because now our net position is below what a year's expenses would in essence be. So management had to go back and reassess going concern constantly, and after much discussion and back and forth related to potential projects and closings and other things like that, ultimately it came down to the fact that the operating expense itself would be moved to a budget line in the town's department code to be able to continuing, the operations if we don't get the revenue that we need, so the going concern piece of this was kind of relieved a little bit because of the fact that there will be other funding sources to pay those operating expenses if needed. Okay, so I mean, and then I see this a lot. I do a lot of IDAs and EDCs throughout the county, Nassau and Suffolk, and they hit these lows. They'll have a closing and they'll add $500,000 to their fund balance in 1 year, and then 15 years goes by with no closings, and then finally they get another one, and it's very difficult. Yeah, the competition is hard. Suffolk County EDC is out there a lot. Nassau County EDC is out there a lot, as well, and they really compete hard for those non-for-profits. So it's tough. It's tough. Yes.
Have you seen any of the EDCs kind of cease to exist as a going concern, or?
Not necessarily cease to exist. Some of the structures of the other EDCs are a little different, where they are generating annual revenue when it comes down to compliance charges. So they'll have like an annual compliance charge of $2,000 or $1,000 or 500, you
To
know,
keep money flowing.
yeah, to keep money flowing. And in essence, that was the cost that was hopeful to cover the annual reporting requirements
Right,
that the
that's what I was
EDC
gonna
has
ask.
to do. Right. So, but you know, you obviously you can't go back. Right. So, you know, you can only try to change your revenue schedule going forward if you do so wish. You know, some of the IDAs do the annual filing requirement as well. And it's pretty much to try to cover all the costs related to the Paris filings and other things like that that have to be done. So you know, it's some, you know, it's in the best interest of the towns to, you know, to keep these open because of the fact that, you know, when a perfect example, the airport, the $400,000 grant, that's a perfect example. You want the non-for-profit to be able to apply for those types of things. So, you know, so they end up trying, they keep it open. You know, some of the ones that are in the same situation as you, they'll end up getting like a budget infusion from the town to help them out to continue operations. You know, because like, you know, like I said, it's just, it's, you know, um, it's definitely beneficial to keep it around. It's in the best interest of the parent company, the town.
Well, if you
You
have
know,
some
because we also,
suggestions on,
sorry, go ahead.
if you have some suggestions on how to do what you were talking about earlier, whether it's that $2,000 journaling or whatever it might be on a separate call, maybe we could do that, and then we can bring that back to the committee to see if it makes sense to make a change to
Yeah.
keep this thing going. We do have some anticipated activity, but that's
Right.
anticipated, not realized.
Yeah, yeah. But like, you know, if and John will know, and even like, you know, goes back, you know, it's, you know, we, you know, 20 grand you know, 100 grand, they think about it, can last the,
Right.
you know, that would put us in a position where we can last for a long
Of
time, you know.
solvency.
Yeah, right. So
So-
it's like one closing can really, you know, bring a lot to
So-
the table.
Yeah, I'll just weigh in. Obviously the IDA is very active and very solvent and has a lot of revenue, and we're doing a lot of stuff. The EDC, however, which is our entity for helping non-for-profits. The last deal that we did for the EDC was, I believe it was the Sable Ambulance company built a new facility, and they did a bond deal, and that was before I got here 10 years ago. And the fund balance, you know, and the expenses of the corporation are basically our annual audit, you know.
Yes, that's us.
Yeah, every year, you know, we the fund balance has dwindled. We do, as Brad mentioned, we do have a couple of potential deals on the horizon, which would you know, replenish our fund balance, and we'd be good. But again, like Brian was mentioning, I do think it's important to keep the corporations alive, if you will, for reasons such as applying for the grant for the airport.
But the corporation also has required filings that they have to do until these bonds mature. So
Okay.
no matter what,
It has to, right?
Right, we have outstanding bonds. Okay.
Yeah, you have outstanding bonds. So you might have, you know, changes in the name. You might have other things that pop up that you have to, you know, get, you know, legal opinion on. You have to have the organization at least active because those bonds are active. You know,
And one other thing, I believe instead of having to go to the town, I believe we could legally. I was speaking with bond counsel at Nixon Peabody. I believe we can justify possibly transferring some money to the corporation from the IDA.
yeah, that would take a legal opinion, correct?
Okay.
Yeah, because you know the IDA is very restrictive. So you know, if you get a legal opinion on that, the board is protected. Do it.
Okay.
You know, but yeah, your furthest maturity is February of 2035.
Okay.
Okay. Yeah, and it's a community ambulance company. Yeah, and then the other ones are United Cerebral Palsy Association, series A1
Right,
and
and then-
A2.
And then if
Yeah.
we do a new one, we've reset the clock and go out, depending on the maturity of that issue,
Correct.
15 or 30.
And if there is a new one, I would assume at that point, if there was an annual fee associated with keeping the fund alive, it would go towards that project.
Well, it's unrestricted. So you would assess the revenue, and the revenue would come in, and it wouldn't necessarily, be used directly for that project. It would just be used directly towards the annual reporting requirement of the EDC. To help alleviate the administrative responsibilities of that.
The way we would get revenue and would be if we have a possible application for another ambulance company wants to build a facility. We're going to issue revenue bonds, and at the closing of that deal, we would receive a fee. The agency would receive a fee.
Right,
just like the IDA does.
Yeah. Yeah. But it would just be, those, and depending on the size, those fees could be very substantial. So, and that's kind of what we've seen. We've seen a lot, a really like one big win, and then like, okay, we're good for another 20 years. So, and then, but we just got to get that one good win. So, okay. All right. So, I'm going to bring it back to the financials real quick.
We still have Brian? There he is.
Sorry, I hit a chord on my
That
desk,
was
and
unexpected.
I kicked a chord, and just everything went blank, and I was like, oh, okay. So on page 14, just has the conduit debt and those particular revenue bonds and transactions. So again, we have 3 series of revenue bonds outstanding with an aggregate principal balance of like 11.44 million. And on that same page at the bottom, we talk about the unearned grant revenue that we were talking about earlier, which was the $400,000 grant that we got, which is a significant grant, and it's really going to help out with the airport and that with the tourism. So we're pretty excited about that. I know management is, and that grant period ends September 1st of 2025. So you guys have to spend all that money before then. Please do so. Moving on to page 16, again, just has that little bond schedule that shows the 3 bonds and what was paid off during the year. We actually started off the year with 12.7 million, and we paid off 1.3 million, and then ending the year with 11.4. Page 17 is our report on internal control over financial reporting. Okay, I'm glad to report as well here that we did not identify any deficiencies in internal control over financial reporting or compliance and other matters during our audit. So we have no comments to give. I mean, obviously
My eyes are horrible. Does that say 30, 35, 30, 31, and 30, 31?
No. Your eyes are right on. I just noticed that too. Yeah, it says 3035. We need to fix that to say 2035. I just literally noticed that a couple of minutes ago. So we'll fix that page. It's supposed to say 2035. I don't know how that happened, but we'll get that fixed.
That's a real long bond.
That's a really long bond. Right.
Are you sharing that on the screen? I'm not seeing
No,
it.
I'm not sharing that. That was on
Okay.
my computer. It's page 16 on the EDC's
John, he intentionally
financial.
didn't share it because he knew the
Yeah.
error was there.
Right. So we just need to fix that. So again, we didn't have any comments, like I said, to report to management regarding material weaknesses or significant deficiencies. So really, we just need to make sure that we continue to focus on funding the EDC and figure out how we're going to, cash infuse it for future administrative costs. So are there any questions besides the year that we need to fix?
Take it away, Ann.
All right, we're gonna vote to, I move to vote to certify the audit of the Town of Islip Economic Development Corporation, also as anticipated to be amended on page 16.
Perfect.
Do I have a second?
I think John Lorenzo second. Yes. All in favor?
All in favor?
Aye.
Aye. I think at this point, we can move to adjourn the meeting. And I make the motion.
Second it.
Any second?
John? Okay.
Second.
All in favor?
Aye.
Thank you.
All right. Again, if there's any questions, feel free to reach out directly.
Thank you, guys.
And we'll get this
Have a great weekend,
PDF.
everybody.
Yeah, we'll
Thank
get this
you,
Great
PDF.
weekend and
guys.
happy Father's Day.
Yeah, happy
Yeah, you
Father's
too,
Day.
Oh, happy Father's Day to everybody.
Thank you all. Happy Father's Day to you fathers out there. Thanks for
Okay.
meeting on a
Sure.
Friday. I appreciate it. Have a great weekend, everybody.
You too.
Take care.
Take care.
Take care.
Bye, guys.
Bye-bye.
Take care.
Bye-bye.
Left the meeting. Save it. I fucking
You're
left
in.
the meeting. Are you still in it?
I left it too.
I forgot to save it. Save it.
I hear you guys. So I'm clearly not out of the system yet.
30, 35.
I didn't.
Like the other day when